Hey everyone, welcome back to Corporate Decoder, the place where we decode those dense corporate filings to bring you the juicy bits. Today we are looking at a document that shows a company is getting ready to stretch its wings financially. Get ready because this report is all about expansion and not just a little bit. We are diving into a filing from Heritage Distilling Holding Company Incorporated, and it looks like they are making a significant move to fuel their future growth. This isn't about a new product launch or a celebrity endorsement. This is about the very foundation of how the company can raise money. If you want to understand how companies grow big, this is a really good example. Before we jump in, if you find value in these deep dives, make sure you're subscribed. Also, we have a fantastic community over on Discord, linked in the description, where we discuss these filings and much more. So what is the big story here? Heritage Distilling Holding Company Incorporated is making a crucial change to its corporate structure, specifically related to the number of shares they are allowed to issue. Think of it like this: a company's stock is like its currency for growth. If a company wants to buy other companies or raise a lot of money for big projects, it needs more of that currency. And that is exactly what Heritage Distilling is preparing to do. They are massively increasing the number of shares of stock they are authorized to have. We are talking about adding a whopping 500 million new shares. This brings their total authorized shares to nearly 1 billion. That's a huge number, and it signals they are looking at some pretty ambitious plans. This isn't something a company does lightly. It means they are anticipating needing to sell a lot more stock in the future. Breaking that down, the vast majority of these new shares will be common stock. This is the kind of stock most people think of, the kind you can buy and sell on the stock market. They will also be authorizing a smaller number of preferred stock shares. Preferred stock is a bit different. It often comes with certain advantages, like getting paid dividends before common stockholders, and sometimes it doesn't have voting rights. Companies often use preferred stock for specific types of financing. Now, this big change didn't just happen in a vacuum. They took it to their shareholders, the people who actually own pieces of the company, and the shareholders gave it a strong thumbs up. Nearly 88% of the votes cast were in favor, and that represents about 58% of all the stock that was outstanding. This shows a good level of confidence from their owners that this move is the right one for the company's future. It is important to remember that this was approved by the board of directors back in August, and then they sought shareholder approval. The filing date for this amendment with Delaware was September 26, 2025, making it official. This move is particularly interesting when you consider that Heritage Distilling Holding Company Incorporated's common stock is traded on the NASDAQ under the ticker symbol IPS. This means they are a publicly traded company, and these kinds of decisions about share structure are fundamental to how they operate and how they can grow. When a company like this wants to expand, it often uses its stock to do so, either by selling more shares to raise cash or by using shares as currency to buy other businesses. The fact that they are increasing their authorized shares so dramatically suggests they might have significant acquisitions or major capital expenditures on the horizon. This isn't just about maintaining the status quo, it is about preparing for a period of potentially rapid growth and expansion. Think of it as filling up their gas tank before a long road trip. They are making sure they have the resources needed to go wherever the road may lead. It is also worth noting that Heritage Distilling Holding Company Incorporated identifies itself as an emerging growth company. For these companies, there are often opportunities to adopt new accounting standards at a later date. However, Heritage Distilling has elected not to use this extended transition period for complying with new or revised financial accounting standards. This suggests a commitment to transparency and alignment with broader market reporting practices, even as they are in a growth phase. Now, what does this all mean for the average investor, or someone just trying to understand what is happening in the business world? It means the company is positioning itself for action. It's a proactive step. They are not waiting for an opportunity to arise. They are getting their ducks in a row so they can seize opportunities the moment they appear. This could involve acquiring smaller competitors, investing in new production facilities, or expanding into new markets. The sheer volume of shares authorized suggests the scale of their ambitions could be quite significant. Looking at the document itself, you see the official amendment. Outlining this change, the exhibit number 3.1 is where you find the full legal details of this second amendment. It's a critical piece of their corporate governance that allows for flexibility and future strategic moves. And of course, every modern filing includes the interactive data file, making it easier to crunch these numbers. But for us, the headlines are the increase in authorized shares and the shareholder approval. Now, let's weave this into the bigger picture. Heritage Distilling Holding Company Incorporated, as a player in the spirits industry, faces competition and market dynamics that require strategic adaptation. Enabling significant share issuance is a tool for that adaptation. It's a sign they are thinking long-term and preparing for potential future capital needs that are likely substantial. This could be to fund large-scale expansion, pay down debt strategically, or even to make significant acquisitions that could reshape their market position. The fact that the shareholders ratified this strongly suggests that the management's vision for growth is aligned with the interests of its owners, which is generally a positive sign for corporate health. However, without a crystal ball, we can only speculate on the exact nature of these future plans, but the direction is clear: prepare for growth. So, what is my take on this? Heritage Distilling Holding Company Incorporated is clearly gearing up for a significant period of development. The decision to massively increase authorized shares is a bold move, signaling substantial growth ambitions. Their proactive approach to adopting financial reporting standards as an emerging company also points towards a commitment to robust corporate governance. The biggest risk going forward will be the execution of their expansion plans. Will they deploy these new share resources effectively? Will acquisitions be accretive, meaning do they add more value than they cost? And will market conditions remain favorable for their strategic moves? On the opportunity side, if they successfully leverage this increased capital, they could significantly enhance their market presence and profitability. It is a high-stakes play, preparing for potentially big wins. Alright, that is our deep dive into Heritage Distilling Holding Company Incorporated's latest filing. What's your take on this massive share increase and what it might mean for the company's future? Let us know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join the conversation on our Discord community, linked in the description. Thanks for watching, and we'll see you in the next decode.